Hi, it's Brett here from ExperienceWealth. I came across a really interesting article over the weekend, and it's one that we started to receive a few questions around, so I thought I could provide some commentary. I've attached a link to it below, but the gist of the article is that it's unsafe to have surplus funds sitting in redraw. It mentions that there may be some lenders that are looking to sweep away any in-loan redraw available at the moment in the event of hardship to get your repayments back on track. Now, what this article skims across is the fact that this is already the case. Redraw is already at the bank's discretion and noted in the fine print of your home loan contracts. If you fall into default or hardship, the bank will review your situation, and in a lot of cases, you'll have to eat into those savings to get you back on track. Now, in the current climate, outside of hardship, it's rare the bank would refuse redraw, but it's important to note that these powers do exist and could be used. There is a slight difference in accessibility depending on where these funds are sitting. One of the first things to happen under hardship is your redraw is revoked, meaning you can't get access to those funds. If these funds are in an offset account, so as long as you could meet the agreement with the bank, it's possible you could maintain access to some of these funds short term. I honestly think your bank would be more inclined to work with you and negotiate what's affordable in a hardship scenario than just to blanket remove access to all your savings. From a PR standpoint alone, it would be a nightmare for the banks, but the concept itself raises another really interesting question on the bank's power over redraw. An interesting implication is what happens if house prices drop and you have a comparatively high home loan with large redraw. Could the bank revoke this to protect themselves? Well, the answer is yes. Now, would it happen? Well, that remains to be seen. It's important to revisit your lending situation every 12 months to ensure it still meets your requirements and objectives. If you haven't done so, as credit criteria continues to tighten across the board, there isn't going to be any better time than now to review.